Just 1 month ago, it was the most valuable public offering in history. The company briefly became worth more than Amazon and more than Microsoft. And today, that same stock quietly fell to a level it had never touched before, slipping below $140 for the first time. I am talking about SpaceX, Elon Musk's rocket and connectivity empire, now trading on the public market. So what is actually happening here? Is this a warning sign, a buying opportunity, or just the normal chaos of a brand new megastock finding its feet? Let us walk through it together factually and think it through step by step. First, the facts as they stand today. SpaceX trades under the ticker SPCX on the Nasdaq. On July 13th, 2026, the stock fell below $140 for the first time since it went public, trading around $139 and down roughly 4% on the day. That puts it dangerously close to its original offering price of $135 and below the $150 it opened at on its first day of trading. Even after all of this, the company is still valued at somewhere around $1.8 trillion, which tells you just how enormous this business is. Now let us rewind, because you cannot understand today without understanding the last month. SpaceX made its public debut on June 12, 2026. In what was widely called the largest initial public offering in history. The excitement was explosive. Within just 4 days, the stock rocketed to an all-time high of around $225, briefly pushing the company's value above some of the biggest names in all of technology. And then came the reversal. From that peak, the stock has now fallen more than 38%. So in the span of a single month, we have seen euphoria, a sharp spike, and a long grinding slide back down toward where it all began. So the big question is, why? And this is where the analysis gets interesting, because the most important factor is something a lot of people overlook. It is called the float. The float is the number of shares actually available for the public to trade. In SpaceX's case, only about 4% of its shares were made tradable at launch. That is an extraordinarily small amount for a company this size. And here is the key insight. When very few shares are available and demand is high, the price can shoot up violently because there is simply not enough supply to go around. But that same dynamic works in reverse. A thin float makes a stock far more volatile on the way down too. So a lot of that dramatic spike to $225 and a lot of this slide back down is being amplified by that structural scarcity rather than by any single piece of bad news. There is a second layer here that is almost paradoxical. Just last week, on July 7th, SpaceX was added to the Nasdaq 100, one of the most important stock indexes in the world. Normally, that is a big deal, because when a company joins a major index, investment funds that track that index are forced to buy the stock, creating an estimated $4.3 billion in new buying. You would expect that to push the price up. Instead, the stock kept falling. And that teaches us something valuable about markets. Sometimes an event everyone sees coming gets bought up in advance, and once it actually happens, early investors take their profits and sell. On top of that, this all unfolded during a broader down day for technology stocks in general, so SpaceX was swimming against the tide. Now here is a forward-looking factor you need to keep on your radar, and it is a big one. Lockup expirations. When a company goes public, early investors and insiders are usually barred from selling their shares for a set period of time. Over the coming months, some of those restrictions are expected to lift, and when they do, a wave of new shares can hit the market, increasing supply and potentially adding more downward pressure. This does not guarantee the price falls, but it is one of the most important things thoughtful investors watch after any IPO. So, what does all of this actually mean? Here's my honest read. What we are witnessing is less a verdict on SpaceX and more the natural, messy process of an enormous, hyped, low-supply stock trying to find its true value in real time. The narrative and the price have temporarily disconnected, the initial retail excitement has clearly cooled, and the market is now doing the hard work of figuring out what this business is really worth. And to keep this balanced, because that is what we do on this channel, let us look at both sides. On the bullish side, Wall Street is far from giving up. Major firms, including Morgan Stanley, Goldman Sachs, and Citi, have issued buy ratings. One firm, Raymond James, set a price target of $800, which would be a massive move from today's level. Another, Bank of America, initiated coverage with a buy rating and a target of $235, built on a long-term financial model stretching all the way out to the year 2045. Their bull case rests on SpaceX's dominance in rocket launches, its Starlink connectivity business, and more speculative ideas like data centers in space. But now the cautious side. SpaceX currently does not offer the traditional metrics investors use to value a company, like a price-to-earnings ratio, which makes it genuinely hard to pin down what it is worth. That means much of its valuation rests on belief in the future, and belief can be volatile. Combine that with the tiny float and the looming lockups, and you have a stock that could keep swinging wildly in both directions. There is also a bigger picture here that matters for anyone interested in where finance is heading. SpaceX's debut was seen as the potential starting gun for a wave of major technology and artificial intelligence companies going public. Its performance is being watched closely as a signal for what might come next. So even if you never buy a single share, how this stock behaves could shape the entire market environment in the months ahead. So what should you actually watch from here? A few clear things. First, that $135 original offering price, because it is a major psychological line in the sand. Second, the timing of those lockup expirations and how the market reacts when more shares become available. And third, whether the broader excitement around technology and space returns or continues to cool. Those three threads will tell you far more than any single day's price move. Let me bring it all together. SpaceX going from the biggest offering in history to a fresh low in just 1 month is a dramatic headline, but the reality underneath is more nuanced. This is a story about scarcity, hype, index mechanics, and the slow search for real value. Whether it turns out to be a warning or an opportunity, the smartest thing you can do is understand the forces at play rather than react to the fear or the excitement. That is what separates a thoughtful investor from the crowd. If this breakdown helped you make sense of the noise, hit that like button. It truly helps the channel grow. Subscribe to Pisano Finance for clear, no hype breakdowns of the stories shaping markets and the future of finance. And I want to hear from you in the comments. Do you think SpaceX stock is a falling knife to avoid or a long-term opportunity in the making? Let me know where you stand. Thanks for watching, and I will see you in the next one.